Well, consumer inflation in February dropping to 3%, exactly in line with the Reserve Bank's newish target. But we can't get too excited. Higher oil and fuel prices expected over the next couple of months. They'll have a big impact on inflation, probably in the next week or so, in the next 2 weeks. Koketso Mano is a senior economist at FNB. Koketso, good evening. Thanks for your time. Really appreciate it. From what I can see, very specific factors that led to this sort of inflation number of 3%, which was quite a lot lower than January's figure of 3.5.
Correct. I mean, a lot of things conspired to work towards this lower number, finally reaching the Reserve Bank's target of 3%. So definitely food inflation surprises to the downside. That's one of the areas where we got that downside surprise, especially on meat inflation, given everything that's been happening with the biosecurity issues. We also did get a slight downside surprise when it comes to medical insurance. I think we expected it to come out a little bit stronger, given what we saw online with regards to the increases that were planned by these medical insurances. But the number was still a good starting point, unfortunately not very good news going forward.
I mean, particularly foot and mouth and food price inflation has been such a big issue. Actually, quite good to see meat prices even coming down slightly, or beef prices at least month on month.
Correct. I mean, on average, that meat price component was down 1.1%. So it's a very good relief given all the months of, heightened pressure that we've been experiencing. The worry here for us is that these numbers tend to be volatile when you look at the food basket. So we hope that this is not just a dip, a 1 month dip, but that, it could be speaking to producers either not passing on the pressure or there's just been not enough demand for us to see these pressures in the consumer price basket. But there's no guarantee that we won't see them relapsing or re-emerging as the months go ahead.
I mean, all of this is backward looking to February. So great for February. Exactly. And if we didn't have what we have in the Middle East right now, we could be making all sorts of quite nice predictions. All of them really have just completely disappeared, haven't they? I mean, first Wednesday in April, only 2 weeks ago, we'll get a big fuel price increase and everything changes.
Exactly, and it's so disappointing given the fact that, we've been telling so many bad stories since the pandemic as economists, and we're coming into this year a little bit more upbeat around the economy and barely quarter into the year, and we have to really think about these risks that we've been speaking to around geopolitical fracturing that will result in economic uncertainty, and is seeing that exactly with what's happening with the war in the Middle East. So you're so correct. The April fuel price will be the first touch point for South Africans, and then you might see these price pressures being spread out through the economy as you pass on these costs. So it's an unfortunate pivot in our story. It's also very unfortunate timing, given that we thought, the landscape would be so much more positive in 2026.
Various calculations about how big the fuel price increase will be. Ranging from 4 rand a litre to 7 rand a litre. And I'm afraid to say, if you look at the numbers today, probably at the higher end of those expectations.
Exactly, and we're hopeful. If the war didn't last long, or the impact on infrastructure was not really a very big concern in the market, we may not have seen these numbers evolve the way that they have. And I think that's why people are speaking to ranges, because we're hopeful that something will change. But if you look at the average month to date, you will see that for petrol we're looking at nearly 5 rand. For diesel, we're looking at maybe 8 rand. But if you look at the under recovery on the day, for diesel, that's around 11 rands. For petrol, we're looking closer to 7 rands. So it shows you that as the month progresses, these numbers can only get worse, right? And that's why you're hearing the different numbers in the market, but it's only because depending on when you're looking at it, whether it's the average for the month or on the day, it just shows you the point still remains. In April, we're probably looking at a very, very big price hike, unless obviously there's government intervention as we saw in 2022, although I don't think there's a lot of fiscal room to provide that relief.
Yeah, and government spends so much time sort of getting its credibility in order and all of that. Fuel prices go up, let's just say an average of 7 rand. We'll start to see the impact on food price inflation and everything else probably within a month.
Most certainly, already in the April CPI figure, you will see how fuel inflation on a month-on-month basis could be as high as over 20%. just looking at those potential fuel price hikes. And then that will raise headline inflation initially, but we're also very concerned about the second round impact. So how much does that really get passed on to the consumer? And that is exactly what the Reserve Bank will be looking at too, because they're more worried about controlling demand to limit those second round effects, because they cannot really do anything efficient about the fuel price that's already coming up. So we'll have to see how all of these things evolve. But Stephen, based on our back of the envelope calculation, right, a $10 shock above where we anticipated it for the year will give you nearly 0.7 percentage points on top of the headline number that we anticipated at the start of the year. So we're still looking at headline inflation remaining contained within that 3% with a 1 percentage point tolerance band, the Reserve Bank is calling it. So we still see inflation remaining within that band. But as I said, chances are monetary policy will be way more conservative as if they're not already.
And who can blame them? Koketso Mano, thanks so much. FNB Senior Economist.